And good morning, everyone. I'm Dan Rogers. I'm the Executive Director for the Kelowna Chamber of Commerce. It's our pleasure to welcome you this morning to our federal budget briefing breakfast. And hopefully you have breakfast with you. You've already taken care of that and up on what looks like to be another glorious day in the Okanagan. We're pleased to have you with us. Our apologies for starting just a couple minutes late as we sorted out some of the technical issues. We will go for about an hour here, so a good way to start your day, taking a look at some numbers that were released yesterday with the federal budget. We're thrilled to actually have one. So it's been a little while since we've had a federal, and it's a milestone budget with Minister Freeland delivering her first budget document. So welcome indeed for joining us. We certainly have missed you. Some of us like talking about policy and budgets. Certainly I'm one of those that say if you want to look at the heart of the values and focus of an organization, look at where they spend their money. And now with a budget document, a rather large one, we know where the priorities are for our current federal government. Before we get too far in this morning, I do want to acknowledge that for the most part, most of us are on the traditional territory of the Okanagan nations. We thank them for the rich history and culture. I do want to acknowledge a few things this morning before introducing our guests more formally. I want to thank our President's Circle members that invest in our organization throughout the year, including Rogers for Business, Interior Savings, MMP, and UBC Okanagan. Our affinity program, Chamber Group Insurance. If you want to look at a great way to retain your employees, look at our extended healthcare coverage. We are #1 across the country for employee extended healthcare. Just give the Chamber a call if you want to explore that a little bit. We've been with you throughout the pandemic now for over a year. That includes providing resources, sharing success stories, a quick way to take a look at some of the information that is available through your Chamber of Commerce and the other chambers that have formed the Okanagan Coalition responding to the crisis. You can check out Okanagan. We've got this for updated information, resources, and to share some good news stories. We're also on Facebook, so check us out there. We are busy here at the Chamber. That includes very busy today, not only waiting for the provincial budget to be tabled, but also moving to our next Business Smarts. This starts at 9 o'clock with Chamber member James Grieve, who will talk about how to turn your service into a product. 8 clear tips, particularly as we focus to more e-commerce. But if you deliver a service, how do you approach your business? So a great presentation coming up on our Business Smarts today, presented by Associa BC. And fingers crossed, we're still planning for our golf tournament. Registration is continuing and going well. We're filling up fast for the golf tournament. Check out the Chamber website for more information. It's slated for Wednesday, May 26th at the Harvest Golf Course. We want to thank Park Pacific Projects for their continued support of that. Just a reminder, please share on social media if you hear some things today that you want to continue the conversation. Please do so online through our Facebook, our Twitter account. Also, you can check us out on LinkedIn and our Instagram account. So where are we at today? I want to bring in a few folks that can bring their cameras up live. We will have an introduction. We're pleased to have Vice President Dan Price joining us this morning, along with David Bond and 2 tax experts. Not sure how late they were up, looking over every page of the budget book, but we're pleased to have a couple of experts, Judith with us, and Marina, that'll be more formally introduced as we move into our program. We're going to try about 8:20, 8:25 to get into Q&As, and depending on how long you want to stay this morning, we'll continue up to 8:40, 8:45. But if you want to wrap up early and get on with your day, we can do that as well. So at this stage, I'm going to turn things over to two special guests, and we're going to have David Bond join us from KPMG as well this morning. I'm going to start by turning things over. And we're in a unique position because I suspect I'm the only one without initials after my name at this table with respect to accounting. We have the CFO from ML Anderson, Dilworth Homes, Dan Price, to bring greetings on behalf of the Chamber. Dan, thanks for joining us this morning.
Hi, good morning, everyone. On behalf of the Board of Directors of the Kelowna Chamber of Commerce and our President, Jeff Robinson, I'd like to welcome you to our 2021 federal budget briefing. Now, as a KPMG alumni, it's great to see that we have the KPMG team here today to take us through the highs, lows, and everything in between that was the 2021 federal budget. And as a taxpayer and a CFO, I'm breathing a huge, huge sigh of relief today that they didn't jack up capital gains rates. So that said, there are a number of items in the budget that will affect business, and I look forward to getting more details on those today. So just a couple of shout outs before we begin today. We have elected officials, MLA Ben Stewart and MP Tracy Gray with us here today. From the board of the Chamber, we have Jeff Robinson, Derek Gratz from UBCO, Ellen Bulkey from KCR, Pamela Pearson from Centez Automotive, Ron Cannon from Interior Savings and Credit Union, and Maria Warrender, who will also be speaking today. We also have 3 past presidents with us here today. So David Bond from KPMG, who will also be speaking. We also have Steve Thompson and Tom Dies. And our President Circle members for today, UBCO and Interior Savings and Credit Union. So thanks everyone for being here today. So enjoy the session, and I'll turn it over to David Bond while I eat my Pop-Tart this morning. So thank you.
And the KPMG alumni,
Thanks,
I did not know that, so we learned something this morning. Thanks, Dan. Over to you, Dave.
Yeah, well, thanks, Dan. It's always a big morning in the accounting review. Nothing gets us out of bed more than getting to get out of bed and talk about tax and budgets. So it's our pleasure to be here. It's been, like yourself, since it's been 2 years since the last budget. You can imagine, in the halls of KPMG, it's been tough. We have nothing to talk about. We got nothing else we can sort of talk about but really appreciate the opportunity. This is we've done several of these, and we really appreciate the opportunity to bring this to the Chamber members. A big part of what we do is talking to people and working them through the difficult thing that is tax and understanding the tax code and how it impacts them. And that's a big part of what we do here at KPMG, and we really appreciate the opportunity to come and talk to the people here. I'm going to lead the presentation, as you mentioned, is Marina Warrender, who's a senior manager in our office and is part of the Chamber board. Will be presenting as well as Judith Charbonneau-Kaplan. Judith's got an interesting practice in that she's actually a tax lawyer as well. So she's got an interesting perspective on that. So I'm really looking forward to the presentation. And I really, really appreciate the opportunity. So thank you very much.
I'm going to get Judith and Marina to turn on their cameras for just a moment, if you don't mind. There they are. 4 moments. So law and tax. Explain that to me very quickly, if you could, Judith.
Well, it's pretty simple. Tax is imposed by virtue of the Income Tax Act, and that's a law.
Excellent. And that's the designation. So thanks for that. Marina, also a board member. So I must say we have CFO and accountants on the board. It makes the executive director very nervous because I'm responsible for the Chamber budget, but everything's going good so far. So thanks again for joining us. So how this will work, we've got 2 experts here, but I will provide a brief overview from the Chamber perspective. We've been working with our national network to scan the budget document. Some upfront comments. I have not looked at every single page of the 700+ document. We looked at the highlights. We had a good briefing session with Perrin Beatty's team at the Canadian Chamber and the Canadian Network yesterday. We've also scanned a few issues that were important for the Okanagan and the Kelowna Chamber, so I'll make mention of that. And then we'll come back to you two in just a couple of moments. Just to remind those that have joined us, if you want to use the Q&A function or the chat, please do so to pose questions at any time, and we'll get to as many questions as we can towards the end of the program. So I'm going to start things off just providing a brief overview of the highlights from the Chamber perspective and the big picture. And I'll leave the details to Judith and Marina. This is, as mentioned, the first budget document in 2 years, so we are extremely pleased that we actually have a budget. We can see what that financial forecast, at least from the government's perspective, looks like. It's 700 plus pages, so it is a lengthy document. There is a clearer financial picture now when looking at the impact of the pandemic. The last time we gathered 2 years ago, we were looking towards a path towards a balanced budget and significant reductions in our debt. It is, as you can imagine, going the other way. Canada ran up a deficit of $350 plus billion. That's a little bit down than what they expected, given the fall forecast. The net next year will be a reduced deficit, and then that will, at least target, will decline over the next 5 years to about 30.7 billion in 25-26. I think that was about the range we were in 2 years ago. And then there was a planned scale back on the deficit at that time. That, of course, is not the situation today. By the way, we're over $1 trillion or close to it. I'm assuming Marina or Judith will give me the exact number. But by the end of the 5 years in the time frame of the document, it'll be $1.4 trillion. Now, it's interesting to note that as expected in the budget, it's about $100 plus billion in new spending to kickstart the post-pandemic recovery, while continuing to provide some assistance, a little bit for just about everybody. So lots of conversations around the water cooler or over Zoom, I suppose, today, if your staff no longer gather at the water cooler. From tourism recovery, which I'll mention in a moment, including up to some funding for the CBC. There is $30 billion over 5 years. This is one of the areas you'll probably hear most of the conversation of, and $8.3 billion a year afterwards to create and sustain an early learning and childcare program, a national initiative. Obviously more work where the province will be required to address some of the issues and bring women back into the workforce. From a big picture perspective, you won't hear much talk about working towards or having a balanced budget, at least at the federal level. It's now all about debt to GDP ratio. So a strong economy allows government to go into debt, but it will be crucial to ensure that that strong economy does actually transpire. So the ratio of 51.2% for 2021-2022, it was about 20 basis points below that 2 years ago. So as you can imagine, even the debt to GDP ratio has grown significantly. I'll let the economists argue what is the threshold that you can get to. Generally speaking, the government is currently saying they would like to slide back to about 49% within 5 years, and then scale back. We'll talk a bit in terms of the Canadian Chamber Network. We would like a clearer 5-year target, making it a cap rather than just a marker. We are concerned it would be a path to even higher debt load that will take not just our children to pay off, but our children's children. So some policy wins that we noted from the Chamber perspective, both nationally and locally. The programs that are helping small business right now will continue. They are going to be extended at least until the end of September, and then there will be some revisiting. There will be a scaling back on these, they say around July, so we'll see what happens there. There's a new initiative, the Canada Recovery Hiring Program. About $500 million has been set aside for that. I expect, and who knows, KPMG might be doing a session to help us look at how you would apply for that. And there is a relationship with the wage subsidy program as well. They're saying you can take advantage of one or the other, the one that provides the most revenue, to allows you to hire back your staff in case they are laid off. There's also funding, and this is something the Canadian Chamber was pushing for, reskilling and upskilling to help people transition and get back into the workforce, about $1.5 billion set aside for that. We know that most of the interprovincial challenges on trade, particularly with respect to alcohol, relate to what the provinces do, but the federal government has a role. This is something we've been pushing. We've tabled a policy that was passed at the Canadian Chamber. We're pleased that at least it got into the budget document. though it will take cooperation from the provinces to make significant address to get rid of those interprovincial trade barriers that unfortunately still exist. And as mentioned, we certainly realize there is a connection between quality and availability of childcare and women in the workforce and what that means to the economy. So we made the case nationally on the need to make some investments and move the needle there. It's also worth noting there are some sector-specific initiatives. Tourism, there's $1 billion over 3 years to help this sector of the economy. Worth noting, there's $500 million in tourism relief fund to support local tourism in adapting their products and services to adhere to the public health measures and also recover from the pandemic. So they realize this is one sector that has been a hard hit. I'll put the flag on $200+ million to support major festivals and new funding for marketing efforts to help this sector. So as an example, if and when the Memorial Cup gets back going from a hockey perspective, I would assume there would be an opportunity because of its significance to have some federal government support, but we'll wait and see on that one. Also on the travel side, there's some significant dollars put aside to help major Canadian airports in making investments in COVID-19 testing infrastructure. We haven't had time to reach out to Sam at YLW, but we'll certainly be doing that to see if there will be an opportunity for Kelowna International to take advantage of that one. Very quickly, some other policies that we've been supporting the development of a new regional development agency for BC. Funding is now in place in the budget. We've been aggressively pushing for an office in the central Okanagan, so we'll see how that transpires. $500 million has been set aside over 5 years for that, as well as some ongoing funding. This is a new agency that's, at least the budget document is describing it, to help BC businesses grow and create jobs. One of the things we came up with early this morning, there is a note around the creation of a community service recovery fund. This is important for so many charities, nonprofits, sports organizations that have also been massively impacted. This is to help them better support community economic recovery. And I thought there might be a bit more on the infrastructure side, $1.9 billion over 4 years to recapitalize, primarily focused on the national trade corridors fund, moving our products to market on an international basis. Should note, I have this one in there, much attention is going to be on the childcare, but so should the green focus. This is something the Liberals made it clear that they're going to focus some of the budget on, that the recovery will be as green. We'll see how that transpires. The goal, 25% of lands and oceans by 2025, so they've described where they want to go. There's money set aside for home builders to complete energy retrofits. We assume that there will be some to help small business do similar approaches to reduce their energy costs and footprint. We'll be digging a little deeper to see if there is money available for that. And there is $5 billion over 7 years to help Canada move towards its international targets for carbon reduction, fast-tracking the decarbonization projects. And if you want, you can go Google decarbonization projects. On the tax side, we were certainly pushing, and we'll push every level of government to be cautious about adding new tax, and we've still seen that at other levels of new taxes being added or tax escalators being still coming through. There is a new national spec tax on non-resident property owners, so foreign owners of property that are sitting vacant. They'll now be subject to a federal tax. We'll see whether that allows the province to back off on its tax that they have only on some jurisdictions. Unfortunately, across Kelowna and West Kelowna, that's expected to raise close to $1 billion, $700 million over 4 years. If you own a big car, very expensive car, your own private plane, or a very expensive boat, or if you're thinking about it, you might want to buy it fast, particularly if your boat's over $250,000. You're subject to a 10 to 20% tax starting in January. And interestingly enough, they've done the math. They think that will extract about $600 million over 5 years to help pay for some of these expenditures. That's the numbers at a high level. We'll get more details here in just a few moments. The key, though, we believe from a chamber perspective, is not what's on the books, but how it's managed going forward. And that will tell the tale as to whether there is success as we move through the final stages, hopefully, of the pandemic and towards economic recovery. The destination has been mapped out, but it will depend on how the government executes and responds and how efficient they are in the spending that they've set aside. Does it actually stimulate the growth and our long-term global competitiveness? And there's some benchmarks that we'll be watching very closely over the coming years to ensure that that indeed is wise spending that's managed efficiently. The deficit spending has to spur private sector investing. We need to move away from the public spending over time. So we'll be looking for that as well to create opportunities for Canadian. It will come from small businesses and the private sector. So that has to be the focus of some of these initiatives. I just wanted to note a couple things from the Chamber perspective that we'll be passing on to government. It's important for the federal government in this case, but also we're going to have a provincial budget later today, that they need to be aware that they're not the only order of government that is levying taxes. The cumulative impact continues to be a major concern with small businesses, and greater effort is needed from all levels of government to understand what the total impact and spending hikes is if it's beyond inflation. As an example, we understand the challenges with local government, but we're going to get our tax bills here shortly, and it was a 4% increase in property taxation this year. So even though the federal government is trying to hold the line here, as an example, if that's taken up by the provincial government or local government, there is a negative impact on businesses and the economy. So what's the long-term plan? Now, we do believe there should be more discussion around debt reduction strategy. It's going to take some time to dig us out. So what is that strategy? How we're going to get there? Is it belt tightening, combination of strategic investments on a competitive basis that will grow our economy? Those things need to be talked about now. And there is a question as Canadians, did we get our response to the pandemic right? There is a need for a comprehensive, nonpartisan, post-pandemic review of the national response and recovery and improved preparation in advance of the next emergency, the next pandemic. And that will, comprehensive takes money. So there should be some discussion of what the scope of that is and the funding. It's never too soon to talk about the next pandemic. Yes, okay, it's too soon to talk about the next one. All right, I'm going to turn things over. As previously introduced, we have two experts here, Marino Warender from KPMG and Judith Carbonneau-Kaplan. Judith, we're pleased to have you back again. I'm going to stop sharing. You were with us 2 years ago, man, time flies, to talk about the federal budget. So I can't remember which one was going first.
I'll be starting.
Judith, thanks very much for joining us in advance. Thanks to both of you. I know there was likely a tremendous amount of work that you both put in getting us to this stage. So thanks for joining us, and over to you.
Thanks, Dan. So as Dan mentioned, this is the first federal budget in 2 years. It comes right in the midst of the third wave and a severe wave of the pandemic. In the past year, we've seen extensive and unprecedented spending. So it was pretty expected that there would be continuation of spending relating to the pandemic and helping Canada recover and work towards moving out of the pandemic. There was a lot of speculation as well leading up to the budget regarding what sort of tax measures would be put in place in order to pay for all of this pandemic spending. And so this budget is interesting in that we see a lot of the spending that we had expected, but it's also marked by what is not in the budget. So let's take a look at that. What was not there? We didn't see any changes to the capital gains inclusion rate, which had been widely speculated as a way to increase revenues for the government. No changes to the principal residence exemption, no income tax rate increases, no significant tax changes really in general increases, no wealth tax, which had been often talked about. There's nothing on intergenerational transfers of businesses, and that was something that kind of comes up, that has come up several times over the past few budgets, though our last one we know was quite some time ago. Nothing new on the stock option rules that had been kind of announced that an update was coming in the economic update in the fall, and no comprehensive tax reform, or no announcement to look at comprehensive tax reform. So there was a lot that wasn't there, but there was a lot that was there as well. What are some of the highlights? Well, we saw on the business tax side, a lot focused on the COVID recovery measures, and a lot from a green recovery perspective. On personal tax measures, a smattering of measures here and there. As Dan mentioned, tax on non-resident, non-Canadian owned real estate. Marina's going to talk about that a little bit more. That was quite interesting. And then we saw some other tax measures on the excise tax side, GST side, some interesting CRA, some interesting measures that are going to help CRA, or aimed at helping CRA collect and audit to increase revenue, and some other taxes. So with that, I will pass it over to Marina to walk us through some of the business tax measures.
Thanks, Judith, and hello, everyone. So we'll start with the business tax measures. Yes, there was a long document that had all this information in it. So the first piece is really the emergency business supports. So we have 3 programs now, 2 that we already know, which is a Canada Emergency Wage Subsidy and the Canada Emergency Rent Subsidy. Dan already mentioned they got extended. So they were supposed to come to an end on June 5th. So now they have a proposed extension up to September 25th, 2021, and then might even be extended further up to November 20th if the conditions are in the way that businesses still need that additional support. On top of that, there is a new program that got implemented, which is the Canada Recovery Hiring Program. And I'm going to talk about that a little bit more in a second. All of them have in common that they do have a decline in revenue compared to reference periods to qualify for those programs. So talking about the first one, which is the Canada Emergency Wage Subsidy, Judith, we can go to the next slide. So it's still the same as it was before. So we have a combined base subsidy and a top-up wage based on revenue decline. There will be now no subsidy where revenue decline is less than 10%. And really the plan for the government now is to phase those subsidies out. So we are starting at a 75% subsidy and are slowly, gradually going down to a maximum of 20% by September. To see what that looks like. So the maximum weekly benefit per employee gradually decreases from $847 to $226. And there was some discussion about, especially for public companies, how they're spending their money. Do they still pay big dividends? Do they pay their C-suite people still big dollars? So the budget is proposing an additional measure. And so what they're intending is to compare the executive compensation from 2019 to the one in 2021. And if that in 2021 is higher, then a repayment of those benefits is in order. So that brings us to number 2, which is the Canada Emergency Rent Subsidy. So also still the same, it's a financial assistance for eligible fixed property expenses based on revenue decline. So also this is going to slowly phase out, starting at 65%. So that's the current level that we're at, and that will slowly decrease to 20% by the period of August 29th to September 25th. The lockdown support, which is an additional 25% subsidy on top of the CERS, is also extended until September 25th, which is the additional support you're receiving if you can't operate because you're under specific public health orders. The same thresholds are in place, so no subsidy where revenue decline is less than 10%. And we still have a cap, and that's the same as it currently is at $75,000 per period, or an overall cap for affiliated groups of $300,000. So that brings us to number 3, the Canada Recovery Hiring Program. So this is a new program, and it's supposed to subsidize increases in payroll. So what it wants to do is support businesses bringing people back or bringing the hours back if they had to cut those back. As Dan mentioned, businesses going to have to decide if they're going to use CEWS or the hiring subsidy. They can't use both for a qualifying period. So the Canada Recovering Hiring Program subsidizes 50% of the incremental remuneration for eligible employees. So between June and November. So it runs a little bit longer than the other programs, assuming they don't get extended. For profit corporations, it's only for Canadian controlled private corporations. And then individuals, not-for-profits and charities and some partnerships can also apply. So we have the same revenue decline threshold as for CEWS that have to be met to qualify for that. And like I said, for October and November, we might not have CEWS anymore. So there they set the revenue decline at 10%. And then the subsidy rate will decrease from 50% month over month to 40%, 30%, and 20%. And really what they're subsidizing is the incremental remuneration increase compared to a base period. And the base period is March 14th to April 10th. So that additional wage is subsidized by the subsidy rate between 50 and 20%. And you have to apply within 180 days of the period to get that additional subsidy. So those are the main initiatives to get us through the pandemic. So there were some other goals that our government had. Another priority is the green initiatives that they're having. And so they proposed corporate tax cuts for specific income from a number of zero-emission technology manufacturing or processing activities. So that can be things like solar, wind and water, energy conversion equipment, zero-emission vehicles. Like there's a whole long list in the budget. So what they're suggesting for those is that pretty much rates are getting cut in half. So the small business rate drops to 4.5% from 9%, or the general corporate rate drops to 7.5% from 15%. So that's the federal rate that gets cut in half. And so those apply to years beginning after 2021, and it goes for a long time. So it will be phased out in 2029 to 2031. One condition is that at least 10% of the gross revenue from all active business would have to be derived from those eligible activities. Another thing to mention, which is a nice thing actually, is that tax credits will not be adjusted for it, which is a great tax saving there. Another green initiative that the government announced is the capital cost allowance for green energy equipment. So class 43 and 43.1 and 43.2 are expended to support investments in specified clean energy generation and conservation equipment. So those mean that you get accelerated CCA rates of 30% and 50% respectively, where otherwise the equipment that, or like the investments that you otherwise would only be able to amortize at rates between like 6 and 20%. So there are additional faster write-offs and tax deferrals here. Some of fossil fueled equipments will be removed out of those classes to make a bigger point for the green initiatives. Then another business measure that's across the board for all businesses, at least for all CCPCs, I should say, so Canadian controlled private corporations. So for eligible properties, other than long-lived assets, so other than buildings, leasehold improvements, goodwill, those kind of things, everything can now be amortized for tax purposes at 100% CCA rate. Condition is that it is acquired on or after April 19th, so after the budget date, and it has to be available for use before January 1st, 2024. There is a limit to that, so up to 1.5 million per taxation year, and has to be shared among associate corporations. And so this is in addition to all other CCA claims under the existing provisions, and so organizations can decide which class they want to immediately expense. Some of the other things, there are a couple of things to, a couple of restrictions to keep in mind. So it only is available for the year the property becomes available for use, so it's not retrospectively. And there's no carry forward of the excess capacity. So you can't say I only used 1 million this year, so I'll use 2 million in the next year. So, and then one small other, well, I shouldn't say small, but I don't think it's going to impact us here in the Okanagan very much, is the digital service tax that has been talked about a lot. It's in there now. It's the 3% on revenue from digital services that rely on data and content contributions from Canadian users for businesses, but it's only for businesses with gross revenue over 750 million euros. So it's limited to really the big players in the organization in this world. So those are the main business tax measures. So that brings us to the personal tax measures. We already talked about, Dan already talked about the new vacant housing tax. So 1% on the value of non-resident, non-Canadian owned residential real estate, which is to be considered vacant or underused. So the tax is supposed to come into effect next year. So as of January 1st, 2022. There will be a declaration that has to be filled out the following year. So it's a little bit like the SPAC tax in that regard. That being said, there's still a lot of unknown. They did indicate in the budget that they are still going to have a consultation period with stakeholders to get inputs in the following months to really see what this is going to look like. The old age security, so there is an increase of 10% starting in 2022 into one-time payment of $500 for pensioners 75 years or older. So the Canada Workers Benefits is gets an increased phase-in and phase-out rate so that more people actually qualify it. We talked about the federal minimum wage of $15 per hour. So that is if there is no provincial one in place or that is below that level. Adjustments to the requirements of the disability tax credit. So that's very specific on, it's extending pretty much the ability to qualify for this tax credit that you can get. But it's quite technical, so I won't go too much into the detail. Travel component of the Northern Resident deduction, there's expanded access to that. So that's for people that at least live 6 months or more in what is considered the northern part of the country. And another quick one is just postdoctoral fellowships. Income qualifies now for RSP. Before it was not qualifying, although it was taxable income. And with that, I'm going to pass it on to Judith.
Thanks, Marina. So let's jump into some other tax measures, starting with some CRA administrative measures. So there have been a few changes proposed in the budget that are just going to help CRA with its administration of the Income Tax Act and presumably expand its powers in some sense. So that first point on the slide, the CRA Audit Authority, There was a case recently, Cameco, where essentially CRA couldn't compel employees to sit down for oral interviews in the context of an audit. That was confirmed by the Federal Court of Appeal. And so now we see in the budget some proposals to essentially confirm that requirement of taxpayers to answer questions, be that oral or written, and to provide any kind of reasonable assistance for the audit for enforcement or collection under the Act. And that's going to come in place not only for the Income Tax Act, but several of the other tax acts as well, the Excise Tax Act and so on. So that essentially that just confirms the broad audit and authority and powers that CRA has. We've always known CRA to have that had possibly been a little bit limited by recent court cases. Now, once again, extremely broad, and those come into force with royal assent of the budget. Also, some changes to electronic filings. So T4As and T5 information returns can be provided electronically only. Previously, there was also a mailing requirement. There's certain changes to the thresholds in terms of number of slips that were being filed in order to meet electronic filing requirements. So just small changes there. Also a few changes in terms of how CRA communicates with taxpayers. So there's a broadening in particular of CRA's ability to send notices of assessment electronically, even without a taxpayer's explicit consent. And that would be in cases where tax returns have been filed electronically. CRA is also moving towards a default method of communication through the online My Business account with businesses. What's interesting also is not the specific measures, but is to see what sort of revenue or what sort of funding has been sent to CRA. And that always gives us a really good indication of where CRA's audit and collections focus is going to be in the coming year. So where has CRA be allocated funds? Certainly there's $304 million over 5 years in increased funding to audits for large businesses and to identify tax evasion and modernize tax processes. There's a specific focus there on trusts and on GST. So we might see increased activity in those spaces, specifically in trusts relating to tax evasion. So something of note that's interesting. There's also $230 million over 5 years for collections actions. The aim there is to collect $5 billion over 5 years in tax revenues. 41.7 million over 3 years to reduce processing time for personal income tax returns. Certainly that will be welcome. 330.6 million over 5 years to invest in new technologies and tools to address cyber threats and to ensure CRA's workforce has the specialized skills to proactively monitor those threats and safeguard Canadian taxpayers' data. There are also a number of measures in the budget to address tax avoidance and aggressive tax planning. And these measures, I'll only mention them briefly, but they're really specifically targeted at certain aggressive tax planning schemes, often being put forth by promoters. So there are existing rules on reportable transactions. The purpose is essentially to ensure that transactions transactions CRA considers to be aggressive or abusive are reported to CRA. So the purpose is to ensure that CRA has timely, comprehensive, and relevant information that'll allow it to assess any kind of aggressive tax schemes. These new measures kind of modify the reportable transactions measures. They also add this category of notifiable transactions. So again, it's a category of transactions that CRA has found to be abusive in the past or would like to look at a little more closely, transactions that are of interest. So the idea is to really force the reporting, bringing of that information to CRA so they have the opportunity to identify those transactions, examine them, and determine a course of action if necessary. Another one, and this one's interesting, is uncertain tax treatments. And so now there's a potential reporting of these uncertain tax treatments for specified corporate taxpayers. And the idea there is it's kind of similar to US rules that already exist. If the corporation takes a tax position on its filings, that has then been sort of recorded as a reserve in the audited financial statements, that needs to be reported to CRA. And this applies to sort of, we're talking about much larger corporations and businesses. This is corporations with more than 50 million in assets and audited financial statements under IFRS. And it's always only in those cases where there is an uncertain tax treatment that's been taken as a reserve. I would also note failure to report under all these different rules attracts penalties both for the taxpayer who's failed to report as well as the promoter in the case of the reportable and notifiable transactions, the promoter of those schemes. Avoidance of tax debts. So there are different types of, there are rules currently, anti-avoidance rules in the Tax Act that essentially prevent a tax debtor from transferring property to a non-arm's length person, thereby avoiding CRA's ability to collect on that property, to collect the tax debt through that property. However, there are certain schemes that circumvent those rules. New measures are put in place and new penalties are also put in place in order to ensure that those anti-avoidance rules are not circumvented. And as had been announced in the fall economic update, CRA is looking at modernizing its general anti-avoidance rule, but nothing more specific was included in the budget. A couple of measures that arise out of the OECD base erosion and profit shifting sort of discussions. So two measures that are being implemented under this budget. The first has to do with interest deductibility limits. And so essentially this limits the net interest expense deduction that can be claimed in certain circumstances. And it's really to target what's considered to be sort of excessive debt or interest deduction, typically in a context where that's eroded the Canadian tax base. That deduction has been created effectively to remove Canada's ability to tax what would otherwise be its legitimate tax base. So it's calculated as a fixed ratio of 30% of this notion of tax EBITDA, and which is essentially EBITDA, but calculated for tax purposes. So it's the taxable income before interest deduction per tax, before income tax, and before deductions for depreciation, again, per the tax calculation as opposed to the accounting calculation. I'll note some exceptions here because they may be a little bit less relevant in our market. CCPCs with taxable capital employed in Canada of less than 15 million will not be subject to these interest deductibility rules. Groups I'm talking about corporate groups, trust groups with net interest expense of less than 250,000, once again, will not be subject to this interest expense deduction limit. And the other point, again, sort of as part of the BEPS hybrid mismatch arrangements, that really has to do with cases where a corporate group in different countries is benefiting from different tax treatments in one country relative to the other, and effectively either the group is getting a deduction in Canada as well as a deduction in the other country, or a deduction in Canada and no corresponding inclusion in another country. Some sales tax and excise tax measures. So on the goods and services tax side, there are a few amendments to the rules applying for GST on e-commerce businesses, and that the GST rules were for e-commerce were announced in the fall economic update. Reminder, those rules are going to come into force on July 1st. And the key item to note there is simply that platform operators and third-party suppliers are considered jointly and severally liable for the collection and remittance of the GST that applies. There is a limited exception for platform operators that reasonably relied on information provided by the third party. There's an increase in input tax credit information thresholds. So really there's different information requirements in order to be able to claim the input tax credits. And that depends on the thresholds of input tax credits being claimed. Those thresholds have been raised. And finally, easing of new housing rebate requirements. So it used to be that in order to claim the new housing rebate for GST that was paid on a new property, it needed to be, all of the purchasers had to be using as their primary place of residence that property. That's no longer the case. Now you just need one of the purchasers or a relative of that purchaser. Some other taxes that some excise taxes, the increase in the duty on tobacco, as well as a new excise duty on vaping products. So that tax is going to apply in 2022. There's no real specifics on it yet. Government is taking input from industry and stakeholders. And finally, as Dan mentioned, there is a new luxury goods tax. So that's a tax on select luxury goods, aircraft, luxury vehicles, boats. Now, in terms of luxury cars and aircraft, those are for aircraft and cars priced over 100,000. For boats, it's priced over 250,000. And there are specific exclusions for motorcycles, race cars, which are not street legal, as well as motorhomes. This tax is going to be the lesser of 10% of the entire value of the vehicle, or the luxury good, or 20% of the value above the threshold. So if there's a luxury car, for example, above 100,000, the excess, the 20% is calculated on the excess over 100,000, or 10% of the entire value. These rules are going to be effective on January 1st, 2022. And with that, I will pass it back to Marina to wrap us up.
Thanks, Judith. Yes, so just going through a couple of key takeaways. So really what we saw, especially for the business community, so the focus remains on the COVID recovery, getting us out of the pandemic, keep those support programs alive until we hopefully won't need them anymore in a soon future. Another major focus was the Green Initiative platform, really incentivizing those programs. Obviously, there were some other big highlights too, like the daycare, but we didn't focus on them because they're not as like business specific. They're more like indirectly affecting businesses. And then the big other measure is like we're kind of missing the revenue generation measures that pushed into the future. Dan mentioned there's a big deficit. I read that the total small measures that we have heard about, like the luxury tax and all those things, are maybe going to make up about 1% of the deficit. So there's still a lot of debt that has to be dealt with. So we'll have to see what's going to come in the future. That is going to be the interesting question moving forward here. And that is it from us. So if there are any questions, we are happy to answer those. If you have any questions that come up afterwards and you haven't thought about them, here's our contact information. Feel free to reach out.
All right. First of all, let me, as we move into this next phase, thanks Marina and Judith Carbonneau-Kaplan. Judith, great to have you back. I'm going to bring you back on camera. And if I could get Dan, and we're pleased to have Jeff Robinson, the chair of the board for the Chamber, I think was joining us, although he was also managing his children this morning a little bit and some of the other commitments. So he might not be able to join us for a bit of a question and answer session. We'll go 5-10 minutes to see how people are. Just to note, we do have one question in the queue I'm going to get to, and then we'll have a bit of a discussion. And Dan, if you have some thoughts that you want to share, that'd be great as well. As far as the attendees, I did want to know, I think we had one, Mike, you put up your hand. Just a reminder, if you want to use the chat function to communicate with us, that'd be great. Or if you want to get a question in, use the Q&A function. And that's where I'm going to start. Those that if you have to get on to work, just a reminder, for attending today, we will get you a copy of this presentation as well as a link to the recording in case you want to see it, and the information that we provided to there. So that's our special offer to you. We'll get that to you as soon as we can following today's session. So I'll leave this to Judith, Marina, which one would like to answer. The question, will the hiring program, the new initiative, also apply to businesses that rely on contract workers as opposed to having that apply just to employees? Are you aware of that? That also was an issue on some of the other programs, but on the new program, has there been any delineation or determination by the government on that point?
Based on, I'm going to take that one. So based on the budget right now, it does not specify anything like that. It does talk about employment relationships. It does also lean on, it makes a mention that it's similar to the SUS program. So really the only time when there's like in a contract relationship is like when there is a cost sharing arrangement between multiple organizations. So those qualify, but that's the extent of that.
All right, so if there are any other questions, use the Q&A or chat. Maybe Judith, I think you're controlling. If you want to just bring this, stop sharing, and Dan, if you did want to join, if you had any questions before we move towards the bottom of the hour and wrapping up. I did have one question, and Dan, it might apply. We were looking for some initiatives to address the housing crisis across the country. There is money in there, I assume, but most focused at non-market housing and continuing a plan that they had talked about previously. Doesn't look like they're doing anything in a significant way to address market housing to make it more affordable for Canadians and address what we're seeing even in the Okanagan. And affordable housing, just even from a workforce perspective, recruiting, retaining people, such a huge issue. Did you notice anything in the budget in that area?
Not so much. It really doesn't address it. I mean, it really comes down to it's a supply and demand issue. And, you know, of course, the price of lumber, as everybody knows, if you've been to Rona or Home Depot lately, is just shot through the roof. The reality is people are out there buying in North America. They're putting their money towards housing. They feel if they don't get in now, they'll never get in. And it's creating demand like I've never seen before here, especially in the Okanagan. And we found in trying to recruit younger people to the area that trying to get them here with the price of housing and rent the way it is proving to be challenging. We're also seeing that in our locations in the Fraser Valley as well. So, you know, in terms of the budget helping this process out, certainly did not see it.
So, Marina or Judith, anything that stuck out in your mind to, I know there's the national strategy, but most of it's focused and importantly on, you know, getting people into homes and addressing the homelessness issue and non-market housing and supporting initiatives by the provincial government. But it didn't look like they were addressing some of the costs that are driving up. And I think the increase in lumber price is a good example of the cost of material that we're seeing. Anything that you saw in the budget?
No, there wasn't. Like really the one thing that there was speculation about that Judith mentioned was like maybe to do something about the primary residence exemption to, you know, maybe extend the time frame when you're eligible, but nothing like that happened. So other than the 1% SPAC tax that, or whatever what you want to call it, which lots of people say it's minimal, the amount of people that is going to play to, because it's only going to be for non-Canadian, non-residents. It is very limited, yeah.
Right. So Dan, did you have any lingering questions just before we wrap things up? Let people get back to work and on their way or finish their breakfast?
Nothing for me.
Okay. You know, one quick one if you want, Judith, you mentioned the CRA. That's one of the things I always flag. You always see adjustments for the CRA and budget for CRA. Are they putting more money to chase more people, or are they going to bog business down with frivolous audits or investigations? Is this normal, what we've seen, and some of that attention that you made reference to, or are there enough? Is this something takeaway that you see? Well, they're putting more effort in here because of the pandemic. They're concerned about fraud.
I'd say it's pretty standard at this point. We've seen over the past several budgets increasing funds being sent to CRA, specifically relating to aggressive tax planning, trying to increase its audit and collection powers. So it's very much in line with what we've seen in past budgets. It's not at all unexpected, and certainly in future years, I think that'll only continue to increase. The hope is, with some of the measures that we did see in the budget, there's going to be a little bit of an increase in efficiency, along with an increase in their ability to collect on taxes and to audit effectively. Because as you mentioned, otherwise those types of actions create a serious drag on business. So hopefully those are happening in tandem.
Yeah. Excellent. Well, I'm going to wrap things up, let people get on their way this morning. I'm going to turn things over to Dan just for a final thank you.
Well, thank you, Dan. I'm sure you'd all agree that was a very informative session today. So thanks so much to Maureen and Judith from KPMG for a great presentation. We thought you did a fantastic job. And we certainly appreciate that there's not a lot of lead time to put these things together. So as a small token of our appreciation, we'll be making a small donation to a local charity. And that local charity is Mamas for Mamas. So it's a great choice. It's an awesome charity. So the money will go a long way there for sure. So thanks everyone for attending today. And I just wanted to remind everybody before we leave, get out there and support your local restaurants. They need you more than ever right now. So go out there and spend a bit of that tax savings you got from the budget yesterday. It's your local food establishments. So thanks everyone.
Excellent. Thanks, Dan, very much. Judith, it was great to have you back. Marina, thanks again. We look forward to working with you guys in the future. Thanks, everyone. I'm going to wrap things up just by acknowledging, if you are still looking for opportunities to engage us this morning, our Business Smart session starts at 9 o'clock. We'll look at productization of services with our presenter. That's at 9 o'clock, our Business Smarts for Chamber members as we help through the pandemic. Thanks again for all of you joining, and we'll get some material out to you as soon as we can. Thanks very much and have a great day.